You can earn thousands each year by doing stuff like selling on eBay, walking dogs, lending out equipment, renting property on Airbnb, or even just a room in your house and not have to pay a penny in tax. It's through using something called tax allowances. There's quite a few of them, and they're pretty useful to know if you're looking to bolt on some extra income and hang on to more of your earnings. Let's have a look at 8 of them. Hi, I'm Marcus De Silva and welcome to the Steps to Investing YouTube show, helping you beat low interest rates with simple tutorials and strategies that get you investing in the stock markets and earning a better return. Please, can you like the video and subscribe to the channel and turn on notifications as we release new videos every single Monday. Also, send us an email if you have any questions, as we have a whole network of experts that can assist. My email address is marcus@stepstoinvesting.com. Now, at Steps to Investing, we bang on about the tax-free advantages of using an account like an ISA or SIPP when you're investing, but actually there's loads of other ways of earning money without paying any tax. And I'm talking about legal ways. I'm sure Pablo Escobar probably didn't pay much tax. Now, the government sets them out through the tax allowances that they set. So these are these tax-free limits up to which you can earn for different streams of income, and it's for each tax year. If you know how to use them, you could save thousands. So today, we're gonna have a look at 8 of these tax allowances. At the end, I've also got one final way of saving on tax. It's not really an allowance, so stick around for that. Also, please like the video and subscribe to the channel if you like what you see. You can comment below if you have any questions, or as I said in my intro, you can send me an email. All right, number 1, your personal allowance. Let's begin at the beginning, income tax. Don't forget that you will not pay anything on earnings up to £12,570. Mr. Chancellor Rishi Sunak has frozen this for 5 years, and whilst that sounds good, it's actually a sneaky way to increase tax revenues because it's likely our wages will rise with higher inflation, pushing us into higher thresholds. So don't forget that. It does start to reduce once you earn over £100,000, but most of us don't, so let's not worry about that. Number 2, your personal savings allowance. This is for all you savers out there. As a basic rate taxpayer, you're allowed to earn up to £1,000 in interest, tax-free, and even higher rate payers can earn up to £500 tax-free. Now, you'd actually need a lot of savings to earn that much interest, given where interest rates are right now. It's why cash ISAs, which shelter you from exactly this tax, don't make a lot of sense right now. Add to this inflation, and it's why your savings are losing value. And it's why we'd say investing using a stocks and shares ISA is the best way to beat inflation. Sorry, I had to talk about ISAs there. If you wait to the end of the video, we've got another video on stocks and shares ISA which explains them all. Also, don't forget to like this and subscribe to our channel. Now, interest rates, of course, could change, so there's one more useful thing to note about savings. If you earn less than £17,500 a year, thanks to the starting savings allowance, you won't pay any tax on your savings interest at all, even if you rake in over £1,000. All right, number 3, your dividend allowance. So we're now moving on to investing, and first of all, the income that you receive from shares, which is known as dividends. Now, you can receive up to £2,000 without paying any tax on dividends, which is useful if you're investing outside of an ISA or SIPP, or you're drawing money from your own limited company. Number 4, capital gains allowance. So this is another investing one. Capital gains tax, sometimes called just CGT, applies to any asset you invest in. It could be shares, antiques, art, and this is the big one, property. You can make a profit of up to £12,300 when you sell these assets before you pay any tax. Now, with property, you can't really chop that up, but with other stuff like shares that aren't held in a tax-free ISA, you can sell them down bit by bit, year by year, and keep that profit under £12,300 to take advantage of this allowance and not pay any tax. Number 5, trading allowance. This is where it gets interesting. Originally coined the eBay allowance, which must have been absolutely great for eBay, you can earn up to £1,000 every tax year from trading without having to pay any tax. Translated, this expands beyond sites just like eBay or Etsy to include self-employment, casual services such as cleaning, maybe a bit of dog walking or gardening, or you could be profiting from the sharing economy by hiring out stuff like your power tools or camera equipment. If you're just starting out, the trading allowance means that you don't have to register as self-employed or fill in a tax return until your turnover tips over that £1,000. However, you might still choose to do both because you might want to pay voluntary Class 2 national insurance contributions so that you can benefit from things like your state pension, or you might want to claim the maternity allowance, tax-free childcare, or tax relief on a loss. If you earn more than £1,000 per year on trading, you'll need to choose whether you're better off claiming actual expenses against the trading income or knocking off the £1,000 allowance instead. Number 6, property allowance. So add to the eBay allowance your Airbnb allowance. It lets you earn up to £1,000 a year tax-free from property. For example, letting out your home occasionally, hiring a garage for storage space, or renting out your driveway. Even better, it can be claimed per person. So a couple letting out their driveway or home could pocket up to £2,000 a year in total without having to pay tax. It can also be used against buy-to-let rental income, providing you don't already claim a reduction for finance costs such as mortgage interest. As with the trading allowance, if you earn more than £1,000 per year from property, you'll need to choose whether to claim actual expenses or deduct the £1,000 allowance. Number 7, rent a room. So this is pretty much as it sounds. You might have a spare room and not mind letting it to a flatmate, a foreign student, or a lodger. And it allows for up to £7,500 per year tax-free earnings. Important to note, this is only for resident landlords, can only be used when letting a room in your main residence. If you rake in more than £7,500 per year, perhaps by offering food and laundry services too, you can opt to deduct the £7,500 from the income before being taxed. You just can't deduct expenses and rent a room relief at the same time. So you will need to choose one or the other. Number 8, marriage allowance. This is the final one. You can get money just for being married or in a civil partnership if one half is a basic rate taxpayer and the other doesn't earn enough to pay tax. The non-taxpayer transfers 10% of their unused personal allowance to the taxpayer, so the taxpayer pays up to £250 less tax per year. You can take a look at this page on the government website if you want more details on that. What you can do is you can even scroll back over the last 4 years if it's applicable and potentially claim a total of £1,188, which might be worth remembering in a year when many people have seen their income decrease or even disappear. Okay, final bonus idea as promised, salary sacrifice. So what you can do is you can arrange with your employer to give up part of your salary in exchange for certain things whilst neatly sidestepping income tax and sometimes national insurance too. Salary sacrifice can be used for all sorts of stuff: pensions, childcare vouchers, cycle to work schemes, company cars, parking near work, work-related training, home technology, and even extra holiday days. There's loads of stuff there. Please subscribe to our channel and don't forget there's loads of free information on our website, stepstoinvesting.com. We'll see you next time.